Hey everyone, it's Reed Schwartz, and I'm here to give you an update on what is going on in our real estate market in the end of September 2025. So we're just going to jump right into this information. I hope you find it helpful. Okay, so here's our market update. First of all, I want to talk about um, home sales. So the good news is there's more inventory on the market. We've got more homes for sale. In fact, we set a recent record. We first time we've had over 1 million homes on the market since prior to COVID. You can look at these numbers and see that in 2023 we only had 600,000 homes for sale. So for home buyers, there's more options out there. We are over 1 million houses on the market. That's a plus for buyers. Now, here's another plus for buyers, not so great for sellers. However, it is great for sellers that you need to be aware of this information before you decide to put your house on the market so you don't end up with your house sitting there for an extended period of time. Houses are still selling. So, this chart shows us the number of homes that have had reductions in their price. Now you can look at there on the right side, we're looking at the last few months of 2025, looking at around 400,000 homes with price reductions. If we go back here, we had just over 1 million homes on the market. So we're looking at 40% of all homes that sell had a price reduction. Keep that in mind. Now, home prices are growing, continuing to grow in our region, but they're growing at a very moderate rate. Okay. On the average, home prices have appreciated. This is national numbers, but they're appreciated about 2% lately, down from, during COVID, those were kind of like a unicorn. It was insane. It's not something I expect to ever see again. And that's probably a good thing because that just really screwed up our housing market. The way the prices went up, but we just had a supply and demand problem. We still continue to have a supply and demand problem, but housing prices are going up at a much more moderate rate. Over the last 60 years, 50 years, the average home has gone up about little 4.5% each year. So we're down a little bit below that now. That's good because how homes are overpriced compared because of the ramp up in prices during COVID. We're just getting things back, need to get back down to normal. So this is showing you that home values, while they're going up on average, this chart shows us the 50 largest metros in the United States. And the change in prices in that time over the last year from August of 2024 to August of 2025. Now, if you look at this, we have some places that went up, let's see, about 4.5%. On the other end of the scale, we have places like Tampa, Florida, where prices went down about 6.5%. Houses are depreciating. Now, I think some of that is, some of it has to do with the economy. It all has to do with supply and demand. Okay, so in Florida and Texas, there's been a lot more new construction than what we saw in the Pacific Northwest. So that could be one of the factors because with all those newer homes coming on the market, supply and demand. The bottom line is if there are 10 qualified home buyers who are ready to purchase a home and there are only 8 homes for sale, the prices are going to go up. That's what supply and demand does. On the other hand, if we have 10 qualified home buyers out there and there are 15 homes for sale that are all the same, then those homes are bargaining with the price to get those home buyers to buy them, and the prices are going to come down. That is how the market works. Okay, so take a look at that. We've got quite the variety across the United States. So what's going on with the Fed and what's the forecast and what's going on with the future? Okay, we need to look at the overall picture, because it's not just interest rates. People make decisions to buy based on what's going on in the world and what's going on in their lives. So I think this is a really good quote. Michael Strain, from the Director of Economic Policy Studies at the American Enterprise Institute, says, I think the worst is yet to come when it comes to tariff-driven inflation. I think over the next few months, we're going to see more and more evidence of tariffs showing up in inflation. So that's one of the experts. I'm not going to get into the ins and outs of tariffs, but they are affecting our economy. And people make decisions based on our economy and based on their personal financial situation. So unemployment is still holding pretty steady. I mean, 4.2% unemployment is a very good place to be. That's really low unemployment in the big picture. Now, job growth, on the other hand, seems to be stalling out. You can look at where we were back in 2021, 2022, 2023, creating 800,000, 700,000 jobs, and it's kind of petered out, and now it's down to not much. So that is going to have an effect. And if this is the trend we're on now, what's going to happen as we move forward into the rest of the year and next year and the year after that? That's a factor that people take into consideration when they're looking at what to do with buying or selling real estate. Here's another one that's really got my attention. People are worrying about an upcoming recession. So you don't have to worry about what the facts are, because they're really immaterial, and we won't know if you follow how they do this whole thing with recessions. We won't know we're in a recession until 6 months later, when they finally look at the numbers and tell us we were in a recession. But what we do have here is this study, this survey, in which 2 in 3 Americans think a recession is coming. So they're making decisions based on that. And 74% of Americans admit that world news and current events affect their financial decisions, as it should. On the other hand, good news. Interest rates have been coming down. We are at the lowest they've been, I think, since last October. It's the last time we saw interest rates as low as they are now. And the result is, just the last few months, the average home mortgage payment would have come down $290 in the last 4 months. So that is the bright light to look at, and hope that those interest rates will probably continue to come down, but don't expect some huge jump. So here's the forecast from Fannie Mae, the Mortgage Bankers Association, and Wells Fargo, looking at where they think interest rates will be for the next 12 months, or going up till the end of the second quarter of next year. And the numbers for the third quarter, we're already at that low end of 6.4. We're right at the end of the third quarter right now, and where interest rates are sitting just below that, about 6.37 today. For the next quarter, you can look at these numbers. You can see that basically the trend is for interest rates to keep coming down at a slow pace. So this gives you what the projection would look like. If those projections are accurate, where we would be as we get out to the end of next year. Now, when we look at interest rates, everybody gets excited when they hear the Fed is lowering interest rates, and the Fed is not directly connected to mortgage rates. And you've probably heard this before, and if I'm repeating myself, I apologize. But a lot of people still hear about the Fed lowering interest rates and expect mortgage rates to follow, and that's not always the case. Typically not always the case. So mortgage rates follow the 10-year Treasury yield. So what the 10-year bond is doing is what mortgage rates will follow, and they follow. There's a spread. So the 10-year Treasury goes up and goes down, and the mortgage rates follow, and they stay above that by, over the last 50 years, they've averaged about 1.76% is the spread between the treasury and the mortgage rates. Okay, so um, but more recently, we've seen that spread expand and grow. And I don't know all the reasons for that, but I think some of it's economic uncertainty, nervousness in the case of the mortgage bankers. They banks set the interest rate. So they look at a big picture, and banks are as conservative as they come. They want to make money, but they want to make sure they're protected. So yeah, so back a couple years ago or last year, 2023, it was up at 2.76%. So that's what they call 276 basis points. Was the spread between the 10-year treasury and the mortgage rate. And then it's kind of average. Currently, it's been averaging about 250 basis points, or 2.5%. And right now it's sitting about 2.1. So if that keeps coming down, then that alone would lower mortgage rates. So we look right here, and right now the Fed is at, or the 10-year treasury, well, not the Fed, 10-year treasury is at 4.13%. And that spread is about 2.22. So that puts us where we're at, which is a 6.35%. Now, if the 10-year treasury is forecast to continue to come down, now remember, this is an economic forecast that's half science and half art, and they're also right about as often as the weatherman. So, but this is what the experts tell us. So the forecast is for that 10-year treasury to keep coming down over the next couple years. And if we were to see that spread shrink, even right where we stay right now, if the treasury didn't come down at all, stayed at 4.13, which is what we see on the right side there with our current 2.2% spread, if that were to come back down to the 50-year average, and I'm not saying it's going to, but we can talk about what might happen. If that came back down to that 1.78%, that was the average over the last 50 years, and the Fed rate stayed where it is, that would bring our mortgage rates down to 5.89%. And that would put, FHA and VA well into the 5.5% range. So I can tell you that would have a significant impact on the number of buyers in the market. So what are the expectations for another Fed rate? Rate cut? Well, we're going to have to see what happens. This could just be the beginning of a stronger housing market as we head into the fall. And we're just going to have to see where that is going to go. So that's going to about wrap it up for today. I hope you found this helpful and the information was enlightening. And the bottom line, what we take out of this is home buyers, the market's going to probably get better for you. On the other hand, a lot more buyers are going to come into the market, which is going to create more competition. For home sellers, what it's telling you is that it is still a buyer's market, much more of a buyer's market. And with all those price reductions, if you want to get your home sold, you need to look at getting it in pristine condition so it shows well, and price it competitively. We are not in the same market we were in just a couple of years ago. So my name is Reed Schwartz with eXp Realty. If you would like to have a conversation with me about what's going on and how it affects your individual circumstances, feel free to reach out through social media or give me a call. I'd be happy to chat with you. And have an amazing day.